If you're in a trade right now, take a pause. If you haven't analyzed the market, don't move. This might be what you need. This is the Mind of a Trader podcast where we cut through the noise, focus on execution, and break down the mindset behind every move. This is where real traders sharpen their edge. I am your host presenter Ali, and this is where discipline meets a strategy. Of course, in today's Mind of a Trader episode, it's going to be a little bit different because over the years, I have hosted many high-level traders on Mind of a Trader, different styles, different markets, different personalities, but one thing always stayed the same. Everyone has a strategy and everyone believes theirs works. One question kept coming back from you. Some asked directly, some commented, some sent DMs, and some just watched closely, trying to figure it out, asking, Ali, what strategy do you actually use? Well, today I'm answering that question. Today I'm breaking down the strategy I personally use, the strategy I have refined, tested, and applied consistently. It's called the ICC strategy. That is indication, correction, and continuation. Of course, this is a strategy I learned by studying the ICC mafia himself, Tradesbysci, not as a student in a paid mentorship, not through private coaching, but by observing what he shared publicly online and putting it to work on the chart. I didn't copy trades or look for shortcuts. I focused on understanding how price moves, how structure forms, and how the market behaves when it's not being forced. Because of that, I've been able to apply this strategy with over an 85% win rate, specifically on gold. Now, let me be clear. This is not magic. This is not luck. And this is not a promise that every trade will win. Losses still happen. Drawdowns still happen. But what changes actually is clarity. You stop chasing price, you stop forcing entries, and you stop trading without clear reason. ICC is built on pure market behavior. It's built on price action, no indicator overload, no emotional guessing, no complicated, templates, just price, structure, and intent. It teaches you how to answer three simple but powerful questions. What is the market indicating? Where is the market correcting? And when is the market ready to continue? Most traders fail because they enter at the wrong phase. They buy during correction or, chase continuation when it's already too late. But you see, the ICC strategy fixes that. Whether you're a beginner trying to understand structure, an intermediate, trader stuck at probably break even, or an experienced trader looking to sharpen entries, this strategy will unlock something new in how you see the charts. Once you understand why price moves, you stop reacting and start anticipating. In this video, I'm going to break down ICC step by step with real examples and clear logic. No hype as usual, no shortcuts, no false promises, just a framework you can study, practice, and apply. If you're ready to stop guessing and start trading with clarity, let's get into it. This is ICC, indication, correction, and continuation. Of course, I'm going to start from the basics, and many people are going to watch this video and probably feel like, you're starting from the simple beginner things. We want the clear strategy. But let me just let you guys know one thing. Without understanding the basics, you cannot actually understanding, where I'm coming from and why I actually chose ICC as a strategy that I personally trade with. I'm going to start with simply defining how I view the market, in regards to what I learned from ICC. So ICC, and I told you this is indication, correction, and continuation. When, we're not going to go deep and try to understand, tell you what Forex trading is, how it works or anything, but I'm just going to show you if you're a beginner watching this. So we have two things that happen in the market for every trader. We have traders who buy depending on the market and also selling. So what is happening is we have what we call a price point. So let's say this is price point X. Okay? So if you buy, you are expecting to make money if the candles, come to this point or close above this point. So if the candle closes anywhere above this point, the buy is clean. You've made money from it. And if you are selling, okay, the candle has to close anywhere around here. So you will see the candles probably, do something like this. Let's say you bought here, so you will see candles maybe go down, try to go up. And anytime they are above this line, you make money. And anytime they are below at this point, you're losing money. Okay? And when you're selling, it means that you're anticipating for the price to go down. So anything above here, you don't make money. Anything below here, you make money. That is the simplest way I can actually explain to any beginner. So if you are a complete beginner, I'd actually urge you to go down on YouTube, watch beginner videos. But for those who are watching this, let's go right into it. So as I mentioned, ICC involves indication, correction, and continuation. I'm going to explain this later on, but before that, let's look at what we call the price movement. The price forms two things. It forms an uptrend, three things actually: uptrend, downtrend, and a consolidation. So whenever we are having an uptrend, the market does something close to this. Okay. In other words, it forms a higher high and a higher low, a higher high and a higher low, another one and a higher low, a higher high and a higher low, higher high and a higher low, and another higher high. So why is this called a higher high? These points are all highs, but this high is higher than this. This high is higher than this. This high is higher than this. So this is why it is called a higher high. These are lows, okay? These are lows, but they are higher lows. Why are they called higher lows? Because this low is higher than this. This one is higher than that, and so on and so forth. So when we are in an uptrend, the market is giving us higher highs and higher lows. That is basically it when we're looking at an uptrend. Now, when we're looking at a downtrend, the market is forming lower lows and lower highs, lower lows and lower highs. I'm going to explain the same way I did here. So this is a lower high, this is a lower low, lower high, lower low, lower high, lower low, lower high, lower low. So this is a low, okay? Because it is lower than this high. So it is a low, okay? But this is a lower high because it is lower than this high. This is a high. This is another, this is a lower high. It is lower than this. It is a lower high because it is definitely a high because, as you can see, it is on the top side. So it is a lower high because it is lower than this, lower high because it is lower than this. This is a low. Remember, we said this same thing. This is the low, but this was a higher low. Now this one will be lower than, this is lower than this. This is lower than this. This is lower than this. Okay? And maybe I can repeat this and say, I think maybe I made a mistake right here. I'm just going to say this is lower than this. Okay? This is lower than this, and this is lower than this, and this is lower than this. So Uptrends will give us higher highs and higher lows. Downtrend will give us lower highs and lower low. After understanding that, now we want to look at something else that many people already know, which is called the consolidation. This is when the market is ranging. Okay, now what it forms what I call, or the ICC calls swing highs and swing lows, swing highs and swing lows, swing highs and swing lows. So these are swing highs and swing lows. So up to that point, I hope we are actually very clear. Uptrends will give us higher highs and higher lows. Downtrends will give us lower highs and lower lows. And consolidations will give us swing highs, and swing lows. So I hope that is clear. If it is not clear, just scroll the video back and watch again until you understand. I do not want you guys to move forward without actually understanding. Let's take a break and talk to traders who are serious about scaling up in their trading game. I'm talking to a trader with skill, but capital is what is holding them back. Listen closely. Most traders don't fail because they can't trade. They fail because they are undercapitalized or even forced to risk money they can't afford to lose. That's where God-funded trader comes in. So far, they've paid out over $13 million to traders all around the world, and their payouts are actually processed in as fast as 2 business days. If that doesn't happen, you get a bonus of $500 for any processing delays. God-funded trader is also stepping up the experience. You can now trade on CTrader alongside other major trading platforms such as MT5, Volumetric FX, among others. This is the platform that I personally use and also recommend. They give you more flexibility, more control, and better execution as a trader. And here's a big one. They now offer a buy now, pay later challenge. You can start with a $100,000 account by paying only $5 as upfront, trade the challenge, get funded, then pay the remaining balance only after you pass. No heavy upfront cost, no pressure, just pure performance for you as a trader. If you already have a strategy, understand risk management, and take trading seriously, this is how you scale up as a trader. You don't need luck, you need discipline and structure. If you are ready to trade with real capital, real payouts, and a real opportunity, check the link in my description or my pinned comment and get started with God-funded trader today. Let's get back into the video. So ideally, this strategy is gonna come out as a very easy strategy, but requires a lot of discipline, a lot of patience, and also a lot of practice. So let me show you something else. So first things first, I want you to understand that if you want to be a successful trader, you need to always do one thing. You need to work on higher time frames. Okay, actually it's work from higher time frames. This is because higher time frames zones are highly respected. Okay, so before we get into all this, I want you guys to understand higher time frame is very key. And according to ICC, which I also apply, I use the 4-hour and the 1 hour, okay, as my higher time frame. And I use the 15 minutes and the 5 minutes as my lower time frame. These are the time frames that we're going to be looking at, and these are also the time frames that if you want to get into, positions where you can actually hold positions for long, without wondering or caring about if you're going to be wicked out, if you're going to be stopped out. Because at the end of the day, once you understand structure and get onto a trend that just began, it is probably going to go on for like a week, for like 3 days, and you're going to comfortably hold your trades. Don't let people lie to you that, you cannot hold gold trades for long. You're going to be taken out. But because out of experience, I've been able to apply this. And let me tell you guys, anytime I catch the trend, I'm good to hold it for like 2-3 days. And even when the market reverses a little bit, I do not care about things such as news, being wicked out, being stopped out, then market goes my direction, because I've already been able to catch my direction. So let's start with indication. Okay, what is an indication? An indication, this is when price forms a new high or a new low. Okay, indication is when price forms new high or low. Okay, and where do these indications come from? And this is key. So this is what happens. The market will be initially consolidating. Okay, so what happens is it has formed swing highs, swing lows, swing highs, swing lows, swing highs, swing lows. So I'm going to mark this area just like this. And then the market could probably do something like this. It could shoot. And once the market shoots from indication, this is where we see probably people, former traders, we call them the former traders. They wake up and find that the market is, already moving, and it's somewhere at this point, and they feel like they've missed out, and they want to get into the trade. So former traders get in here. We have some intermediate traders get in around here. Okay, and I used to benefit also from trading around here, and we also have the breakout traders, trading from around here. So this is formal, this is formal and a beginner. We have the intermediates here, and we have the breakout traders. So once the market does this, what you don't know if you're watching this is what we call the indication. So the market has given us a clear indication that the market is going to be bullish. So what do? We do not trade the indication at all costs. We don't trade the indication because the indication might actually not be as this big. Sometime we'll have the market consolidating, have a small indication, okay? Then you see people jumping on it. And what happens next after the indication is what we call the correction. So I'm going to wrap this and explain it once more. After the indication, after the consolidation, we normally have the indication. So the indication will either form a new high or new low, depending on the direction where the market was going. I'm going to be using the laptop later on to explain this, so do not worry. So after the indication, we have what we call the correction. The correction now could come all the way down here, okay? The correction could as well come up to around there, okay? Or the correction could come up to around there. So what happens? There are traders that we mentioned that jumped onto these trades right here. So they are actually taken out during the correction. Okay, once they're taken out, what happens next? The continuation goes on. The continuation goes on. The continuation goes on. And this is where there is the money, because this is what we trade as ICC traders. Okay, we do not trade the indication. We do not trade the correction. We only trade the continuation. It is a very interesting concept, because as a trader, you are basically waiting for everyone else to be taken out. You're waiting for the, for example, looking at the correction. This is where the greedy traders are taken out. Probably they missed the indication and they feel like, no, it's going to go down, and I've actually, I didn't get when it didn't get it when it was going up. So the former traders are also gotten there. The greedy traders are almost gotten there. And the thing is, at this particular point, this is where traders lose a lot of money. And I want you guys to be very keen in terms of listening to what I'm saying, because this, once you understand this, it like unlocks something new in your mind. Because former traders, beginner traders, got into the indication and lost a lot of money. Now, there's someone else who lost money and wants to go with the other opposite trend. He will get in, during the correction, and is going to be taken out really badly, because we're going to be having the continuation go on. So all the former traders are taken out, all the revenge traders are taken out, all the beginners, all the intermediates, all the breakout traders are taken out. And do not misquote me. I'm not saying being a breakout trader is not a good thing, but I'm just telling you what it is. And this is just basically what it is, because every time before the continuation, the market has not actually has just told us, the market has just told us where it is going, because the indication could be this small, then we have a correction, then we have a continuation, okay? Or the indication could be as big as it wants. It could be as big. And that is why I normally tell even the people in my community, whenever the market moves, never try to chase it, because no matter how the market moves, it will always form a higher high, higher low, higher high, higher low, higher high, higher low, higher lows, lower highs, lower lows. And all these lows are opportunities for you, okay? All these lows are opportunities for you to probably get into the market, So this market, whenever it moves up to here, you do not want to trade around here, because it is actually very risky. Okay, it is actually very risky. But what you wait is you wait for the correction. The correction might be really big, might be actually small. And once you wait for the correction, that is where you get the continuation and get your entry. So indications happen when the market forms a new high or a new low, and they happen from the consolidation. The corrections normally happen from the indication, okay? And we trade the continuation. It is that simple. So you're trading from a point of everyone has been taken out, all the former traders, all the beginner traders, all the people trying to chase the market. And you'll get once you get a good entry, you just have to hold and wait. And you could even scale in whenever you see the market form a higher low. Maybe if it was on an uptrend, scale in there, get another opportunity, and it is that simple. So indications happen when the market forms a new low or a new high. Corrections happen after the indication, and continuations happen probably after the correction. So let's say this was our correction, okay? If this was our correction, we're definitely sure that the market tapped this point. So this will definitely be where we are going to put our take profit, okay? And let's say the market does something like this and goes up like this and like this. We could have our stop loss right here, put our entry, put your take profit around here. And sometimes people confuse it, and I'm going to show it on the laptop, and they feel like this is where the indication ended. No, always look at the higher time frame. Look at the 4 hour, look at the 1 hour. You can use the 4 hour for swing trading, and you can use the 1 hour for your intradays. Okay, so guys, this is basically ICC, indication, correction, and continuation. So let's get into the laptop and see how this actually plays out in the real market. Let's go. Okay, so right now, guys, we are actually checking out the market on the real charts. And I just want you guys to remember what I just mentioned, that when we are in an uptrend, the market will form higher highs and higher lows, higher highs and higher lows, higher highs and higher highs and higher lows. When we are in a downtrend, the market will give us lower highs and lower lows, lower highs, lower lows, lower highs, lower lows. Of course, it will not be as perfect as this, but this is just basically it. And when the market is ranging or consolidating, it will give us what I call, or the ICC calls, swing highs, swing lows, swing highs, swing lows, swing highs, swing lows, swing highs, swing lows. And from here, this is where we are going to see an indication, then a correction, then a continuation. So I'm going to be showing you this in the chart as much the best way possible. Of course, this strategy is one of the easiest that I've ever gone through. So let's look at this particular time, that is around 12th December, where we had the market at around 42.77. You can see right here that the market is actually ranging. The market is not forming, any notable higher highs and higher lows. So it is quite around right here. Remember, I'm using the higher time frame. This is me looking at the market as a swing trader. Okay, looking at the market as a swing trader. So what is going to happen right here? The market is ranging. It is definitely giving us the swing highs right here and swing lows and swing lows right here, swing highs, the swing low. Ideally, that's what the market is doing. And after that, we see the market indicates. And this is where the market tests your patience. This is where the market tests if you are a good trader, if you are someone who really deserves the money in the market. Because ideally, guys, just look at this. The market moves from 43.51 to 45.49. How many people can watch the market move so many massive pips without actually trading? You're just looking at the market. Because this is what I was talking about when I was telling you that we will have the breakout trader, probably start trading from here. Just a second. Probably start trading from here. We will have the intermediate trade from here, and we'll have, the beginners trade here. And of course, I do not say that you can't make money from these moves. You can make good money. But if you know very well that you are about to make so much money, why not wait? Because right here, you do not know, once the market is moving from here, you don't even know where it's going. You do not even have any idea of where this market is going. So where are you putting your take profit? What are you looking at when you're in terms of, putting the take profit? But let me also explain this. Once the indication was over, we had a very good correction. We had a very good, correction right here. Okay. Had a very good correction right here. Everyone was taken out. And why I'm saying that this whole thing tests your patience as a swing trader is because imagine having to wait from Thursday, 11th of December to Friday, 2nd of January to get your entry. Okay? And now we're having, let's say, you remember when I said where the market touched, that's where you put your take profit. Okay? So let's just mark our area of take profit right there. And now we have a very nice continuation. Okay? A very nice continuation. So don't let anyone lie to you that you cannot swing trade gold, that you need a lot of money to swing trade gold. Look, since the market gave us the indication and correction, we did not trade. But since the market tapped or left this point, I want you guys to tell me if it has ever come to this point. No, it came back, but not to this point, because this was a higher time frame, and it was telling us that the market is definitely bullish on the higher time frame, and the market respects the higher time frame so much. And that is what I also mentioned to you. So we have a clear indication, we have a clear correction. If you take your trade right here, let's say we went long right here, took a long position. Let's even say up around somewhere like there. Our TP was there. Then we had our stop loss on the previous low. I'm going to show you how I check my entries. That is a risk to reward of 1:7. So if you risked $100, you got out with 700. If you risked 1,000, you got out with 7,000. So how do I check for my entries? My entries, as I mentioned, I look for my entries. Okay, entries on 15 and 5 minutes. Okay, so when the market is done correcting, as you can see, the market, once it's correcting, is forming higher highs and higher lows, and this can be actually seen very well. This can be actually seen very well on the lower time frame. Okay, so where were we? We were just around here. Just a second, let me get that point. The market has really moved, guys. It was on January. This is January. Okay. Okay, it's around here. Yeah. It was definitely around this zone. Yes, it was around this zone, if I'm not wrong. Yeah, we had the let me just mark it to be sure that this is the area we're looking at. Yeah, so it is this zone actually. This is, yeah, it is actually the same zone where we had the consolidation, indication, correction, and continuation. So I'm going to go back to the 15 minutes time frame. Okay, let's go back to the 15 minutes time frame and get this area so that I can show you guys how I look for my entry. So if you look very well, if you look very closely, you're going to see on the 15 minutes time frame, the market is forming. This is our, sorry. This is our high. Then we have, could say this is a lower high. And sorry. It's not. This is the lower high. Lower high. And then we have lower low. Lower high, lower low. We have a lower low around here, another lower high, lower low. Lower low and another lower high. Okay. Now we're on the 15 minutes time frame. So we can ideally we can see what the market is doing. We can see it do this. We can see the market 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 do this. Okay? So we can actually see the market form a lower low, lower lows and lower highs. So we can tell that yes, we are definitely in a downtrend. So we want to look at the end of the correction. Okay? We want to actually look at how do we know if the correction is coming to an end. So we just zoom into the chart, and ideally what you're going to see, and if you cannot see it clearly on the 15 minutes, please just go on the 5 minutes time frame and make sure you see it clearly. Okay, so we can even do that. So that's 2nd of okay, Friday. Let's go on the 5 minutes. We are looking at 2nd of February. Let me try and get it. No, it's actually 2nd of January, guys. Sorry. Yeah, it's around here. So what you're going to do is look at what the market is doing right here, guys. We had the structure broken right here. We had the structure broken right here. You could even look at this point. You could even look at this point and say that the market definitely started forming higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. It formed another, it formed another higher high which broke the structure, then formed a low, higher low. So it is at this point that you understand that now we are about to go extremely bullish. So you wait for a higher low to be formed and get your entry right there. I'm going to be doing another video because this is just getting too long, but I'm going to be doing another full course, full ICC course for you guys. That only if you guys give this video up to 500 likes. Give this video 500 likes. Comment the word ICC. Say Ali. Do the strategy again. Comment the word strategy. Comment the word ICC. Comment the word full course, and I'm definitely going to show you how I get my entries, how I know that the indication is over, how I know that the correction is over, and ideally just show you how easy it is as long as you put in the work, as long as you definitely understand that you have to, it's all work, guys. There's no shortcut. So if you felt like this was something that you can apply, just go out, do some research on ICC, and I can even show you many other areas. We have indication, correction, we have continuation, and the way the market has actually been moving. We had another indication here, correction, and you see, and if you're looking at a downtrend, like right now where the market is, if you ask me what is my projection, I will tell you that of course we had this consolidation, then we had an indication. You could look at this as an indication, then we had a correction, then we had our continuation. Okay, and now the market did something around 2nd of February. It gave us a new low. So once the market gives you a new low, what do you say? That is where indications are formed from. So we can say that this is now our indication. So on the higher time frame, of course you could get some buy opportunities, but on the higher time frame, I am looking at the market probably going to be bearish. Then after this indication, we actually got this correction. Okay, we got this correction, and we are on a continuation. And what I'm looking at is probably between this zone, I could definitely get a good entry, could definitely get a good sell entry. And I want you to comment, guys, okay, how the market moved later on, because the market is definitely going to move. Get this entry, have my stop loss on the previous, slightly above the previous low, and just wait for a risk to reward of 1:14. This is not financial advice. I'm not telling you guys to take this trade. I'm telling you what my projection is. And of course, trading involves risk. So every time, always make sure you do that. So this is what I'm looking at. The market trying to buy up to around this area where we had the correction, up to around this zone. And slightly above it, I'm going to have my stop loss. So the market could come to up around here, or maybe start selling. It depends on what the market will tell me. I'll just look at the market structure, because understanding market structure is very key. And I want to emphasize this so much. On the higher time frame, understand the market structure on the higher time frame, guys, and you will definitely going to win this game. Do not care about the 1 minute. I see people saying, but the 1 minute, we have 10 1 minute candle. Guys, come on. Which indicator do you use? Come on. Ali, when is the best time to trade? Come on, guys. I personally only trade the New York session for my own reasons. I feel like sometimes we have the New York, sometimes the Asia will give us the indication, then the New York will grab some liquidity with the corrections, and sometimes we'll get the continuation on the New York. And it all happens. Sometimes they'll have to sit down and watch the market correct on the New York and not take any trade. So it really depends, but I prefer the New York because of my time, because of how my schedules are planned for. But what I can tell you is the biggest advice that I know: one strategy, one session, one currency pair, you will beat this market. Learn discipline, learn patience, learn patience, and you're definitely going to be able to beat this game. Anytime this market goes down, guys, please do let me know. Anytime this market goes above 5100, comment here and tell me I gave the wrong projection, but this is definitely going to be a trade that I'm going to take. But if you want me to continue doing this ICC strategy series, please comment the word ICC. Of course, I have collaborated with my new YouTube account. That is where I'm going to be doing the full ICC strategy breakdown. So follow and subscribe to that YouTube channel. Road to 1,000 subscribers. We are definitely right now at 200 subscribers. So thank you so much, guys, for watching. Really appreciate your time. And of course, we are trying to build a community of traders who are always trading with us. That is, if you want to trade with propfirms, we have a community for that. The link is in the description. If you want to trade with my broker, we have a community for that. I have another link there. Those are two different Google form links. Just fill in, and we are going to personally reach out to you and trade with you. These are not signal groups. These are not copy trading groups. This is structure for anyone, for the 1% of you guys who wants to be profitable this year. We want to trade with you. We want to help you, step by step. So thank you so much, guys, for watching. Thank you so much, guys, for the love and the support. I hope I have finally answered the question, what is the strategy that I use? It is the ICC strategy. I'll see you guys in the next video. Love you.
The Mind of a Trader podcast, where we outthink the market.